So I want you to really know that profit isn't an event. Welcome to the Treat Your Business podcast, the show for clinic owners who want real, honest advice and tried and tested ways of doing things. I'm Katie Bell, and this is the new era of bigger insights and bolder conversations to help you grow a clinic and a life you love. Let's dive in. Welcome to this episode. Bigger is not better. What if, rather than serving your business served you? Imagine that, hey? Most people treat profit like an afterthought. Most people and the traditional accounting methods treat profit as we look through everything and then profit spits out the bottom. Most treat profit like an end result and will just focus on the growth element of our business. So growth comes first, profit comes last. Now, money is the foundation, okay? And without enough money, you can't take your message, you can't take your services out there, you can't help as many people as you want to help. And in our industry, so many of you that I talk to are so passionate about what you do and making that massive impact on people's health and wellness in any area, whether it's children's physio, whether you specialize in the neuro aspect of stuff, whether you are a sports therapist and you're really focused on the rehab of sports injuries. You're so passionate about getting your service out there and helping those people that often profit is an afterthought. So money has to be the foundation, because then the more money that you make, the more you can get yourself out there, the more people you can help, the bigger impact you can make. And without money, we are slaves to our business, which is the whole reason most of us started our business in the first place, is to be free. Whether you've always been in private practice or whether you have moved from the NHS into private practice, there will have been a reason way back when that you started this. And for most of you, it will be driven around you want to be able to really make a difference to patients, and you have got bigger aspirations for your life, and you want to be able to control and be in charge of how you work with patients and what your patients get and what outcomes that you can deliver to them. But because we get so focused on our patients and the results and just giving the best and giving as most we possibly can, profit always seems to come last, and there never ever seems to be quite enough money at the end of the month to pay the business owner the salary that A, they absolutely deserve, but B, they warrant because of the number of hours that they have worked in their business. So I imagine you all listening to this as like an entrepreneurial superhero in your entrepreneurial capes racing round. But your powers that you've got as an entrepreneur can only yield and give as much power as your energy source provides. And your energy source is money. So we all think if we grow, if we focus on growth, profit will take care of itself. Wrong. Money issues arise when a few things can happen. Sales, I don't like the word sales because we don't sell, we solve people's problems. When appointments or class bookings or follow-up sessions reduce, okay, when they slow down. The other aspect of it is quite the opposite, is when appointments and class bookings and classes increase, they speed up, so therefore your expenses jump as well, and you don't create that consistent cash flow. Consistent cash flow is really hard to sustain in a business because you will have drought periods that happen, and often unexpectedly happen as well. And what happens when your sales start to increase, your revenue starts to increase, your appointments start to increase, you start to do more, your expenses jump up to match that, and then you get locked in at that new level. Because all of a sudden you've got that extra staff member, or you've got extra cost of delivering those services. You need more equipment, you need whatever it is, those costs go up as well. And then you're locked in at that new level and you absolutely not seeing any improvement in your profit levels. And it really baffles me when businesses are just focused on getting bigger all the time, because as we know, increasing the size of your business, bringing more staff members on, getting satellite clinics, getting additional studios, it doesn't guarantee bigger profits. Okay, they absolutely can deliver you more profits, but it doesn't mean that you're going to double your profits, which is often what we think. Oh, I'll just take this business model, I'll just do the same over there, and I'll just get more profits as a result of it. Because you will have more challenges, you will have more opportunities. More staff members always provide more challenges for you to deal with. So I want you to really know that profit isn't an event. It's not something that happens at the year end when you finally get your tax return back from your accountant and they go, Jamie, you have made 130,000 this year and you have made 25,000 profit. It needs to be part of every transaction that happens in your business. Every wheat bag you sell, every appointment that you see, every room rent that you have, profit needs to be part of that transaction, because if it's not, stop doing it. Profit needs to be a habit. So your job as a business owner is to think about growth. Absolutely. For most of you, you are not happy with where you are right now and you want to change that. But your job first is to maximize your profit. Okay, regardless of the size of your business. Because what you focus on expands. And when we focus on maximizing profit, you'll start to discover new ways to streamline your business, to grow your business, but you've got to figure out the things that make profit and stop the things that don't. One of my previous episodes, I gave an example of a client of ours that was renting her room out, her studio out. And when we worked out what it was costing her in terms of her time and the income that she was generating from the studio rent to this sort of yoga instructor who was just using it on a Friday night, she was actually in a net loss position. She was losing money because your time as a business owner is worth money. Every minute you spend on your business is worth, and it might not be that you see that money coming into your business. Like I spend 2 hours doing marketing and I get paid £100 to do that. No, when you work on your business, you will see that growth and you will see that increase in profit margin then flow as a result of it. Because if you don't, then ultimately you need to stop doing that element of whatever you're working on in your business because it's not giving you a return on your investment. So we've got to stop. I said to this client of ours, okay, it's taking you loads of time. It's loads of hassle. She's leaving your storage heaters on. She's leaving it in a tip, excuse my French, and all for basically £9. But then let's take off the expenditure of that room anyway, which is the proportion of heating, lighting, insurance, tax, and then let's add back all the time that you've spent having to go and check that she's turned the storage heaters off. You've probably lost about £75 to £100. In fact, probably more, I think it was. So really start to think, if you're a busy business owner, you're spending loads of time doing stuff, what is making you money and what's not. Selling equipment is another thing. So a lot of business owners carry a lot of stock. And if you don't have a huge turnover, so you don't have a lot of footfall that are not buying that stock from you, then ultimately you'll be spending a lot of money to not make a lot of money. Make sure that your margins on what you sell things for are worth the time and the calculated risk of you buying that stock in the first place. Okay, and there's loads of ways that you can do that. Make sure, at a really basic level, that when you buy that stock item in, spiky balls, TheraBand, wheat bags, ice packs, that A, you've got the demand for them, B, you've got some way of upselling them for clients coming through, because when clients come to us and we say to them, you could do the wheat bag, you could do the TheraBand, you could do the spiky ball. Oh, by the way, we have an equipment pack. You can just buy it all for $14.99 right now. Do you want to do that? Yes, because I don't want to have to think about this for myself. So you can create that bolt-on, you can create that upsell, but we also know our margins on it. We have an amazing wheat bag supplier, which means we can make really significant margins on it. It is worth me doing. We know per metre what our TheraBand costs us to buy in, so we can make sure we've got the right margins for it. We work out how much each spiky ball costs us, so we can bulk buy and bring that cost down because we know we sell a lot of spiky balls, for example. Okay, But also don't hold stock that you aren't going to sell, because then you're going to have to do promotions, then you have to do offers just to get rid of it because it's taking up space. So really figure out the things in your business that make you profit and stop the things that don't. And when you get into a point in your business where, let's say you've got a member of staff and they are a physio and they also do massage for you. I know that your margins as a physio appointment will be way better than they will be as a massage appointment. So it's then looking at the allocation of time and activity to that member of staff, because you ultimately want them to be making more income, more profit. And you can do that by filling them with physio sessions rather than massage sessions. Again, your data is going to tell you this sort of stuff. So really spend the time to analyze each element of your business and see where you make the most money. And when you focus on that, it will expand. When we focus on growth, we kind of scramble to grow at all costs, don't we? We're just doing everything. We're adding all these ideas in. We're chucking promotions in there. We're doing all sorts. We grow costs, including the quality of your life. I speak to so many business owners who are exhausted, they're overwhelmed, they're absolutely knackered, they're on a hamster wheel, they can't get off, and they are having to grow at their own cost, the cost of their health. When you start thinking about profit first, it's just a much cleverer thought process. You start thinking about, how can I work smarter rather than just harder? Had an amazing, one of our mastermind clients, and I won't mention her name because I've not asked her if I can mention her, but I'm sure she would be fine about it. One of our mastermind clients, amazing. She looked at how she works with her women's health patients, and she recognized that she could deliver an amazing solution to their problems, but didn't always mean that she had to be delivering her service face to face, because there was always a top out. There was always a level she couldn't go any further. She couldn't get any more patients in the week. She couldn't, that was her ceiling. So she created this premium way of working with her that, yes, included some face-to-face work, but also included some non-face-to-face work, some online stuff that went in the background, some ways of checking in with clients that meant she was making way more profit, because she was having that her expenditure to deliver and her cost to deliver was so much less. Really clever way of starting to think about your business, because she started thinking about profit first and growth second. When you start thinking about profit, you figure out how to make it consistently. And one of the things that we often focus on is this bank balance accounting. Bank balance accounting is when you look at your bank as a gauge of how well your business is doing, okay? And for most of you, it is the worst way to gauge how your business is doing, because you can't use your bank balance as a way of saying my business is being successful or not, because it will fluctuate at various periods of the month depending on when your bills go out, when your tax is due, when all of these things that happen. So when we bank balance account, okay, and we don't see enough in, what we do is we take on that troublesome client, that one client that you think, oh God, I never ever want to have to work with her again. But you end up saying yes because you've bank balanced accounted. You've looked at your bank and thought, oh my God, there's not enough in there. Or we just chuck a new product together and we chuck it out there. And actually, no strategy. We're not making any margin on it, but we just throw it out there because we need some more money. Or we throw a last minute promotion out. We jump on Black Friday deals. We start giving 2-for-1s out. We start reducing our margins again for every service that we have out there. Or one of the biggest things I hear is, I'll just have to do the work myself. So when we bank balance account and we think, okay, there's no way I can afford to pay my VA, what you do is you start taking all that work back as the business owner, because just because you can doesn't mean you should. But we often have this mindset of, I will just do it because I can do it quicker and better anyway. And then we start to stagnate or decline as a business. So traditional accounting methods are sales. So let's use the word revenue, or number of things done in your business, minus your expenses, all the things that it costs, gives you your profit. Okay, that's traditional accounting. So profit is an afterthought. So your profit and loss report will say This is how many physio sessions you've done, i.e. £10,000 worth of income. You'll then take off your cost of services or cost of sales. So what it has cost you to deliver that service, okay? And that gives you a gross profit margin. Then you take off all your other expenses, like your admin, your stationery, your rent, your heat, your lighting, all that sort of stuff. Then we take off the tax. Then we might take off an owner's salary. And then we've got profit. Or most of all, what happens is we take off everything, we look at what's left, and then we go, oh, my salary will just have to be that much. A better way of looking at it is to say number of sales minus profit equals expenses. So what is my business able to afford? And when we do that maths, quite often, when we actually allocate the profit first, we start to see that our expenses are way too high. Way too high. So a really good tip is that use smaller plates. Okay, this is like a traditional diet technique, isn't it? If you want to eat less calories, eat off smaller plates. Using smaller plates means having more accounts in your business. Separate your accounts out. So one of the easiest ways, most simplest ways, first of all, is to have a separate account for your tax, a separate account for your profit, and a separate account for your, what I call your operating account, your operating and expenditure account. 3 is a baseline, okay? And what you can start to do is you can start to allocate and move money so that your operating and expenditure account never really builds up any cash in, because ultimately there's enough money in there to pay the expenses and that's it. But you're moving money into your profit account, you're moving money into your tax account. So you don't get to the end of the year and then suddenly have a massive tax bill to find. That is so stressful, and you don't need to do it because profit is a habit. If we start having profit in every transaction, you should be moving money into your profit account. So when I get my profit and loss account back, I know what my corporation tax liability is, I move it into account. I know what my operating profit is, I move that out. Now, in a kind of very simple system, that works really nicely. Sometimes your profit account needs to come back in because you need it for cash flow. So you want enough to build up in your operating and expenditure account that you've got that cash flow. You don't have to keep buying into your profit, ideally. But if you're new to this way of accounting, it's not as cutthroat as that. But if you can use smaller plates, if you can separate out your accounts and start thinking about managing your money in a better way, you will start to build up some profit in your business. You will start to build up your tax so you've got it there allocated. If you build up profit and you decide to actually, I'm going to reinvest some of it back into the business, but there's an amount left, you get to choose what you do as a business owner. Do you take it as a salary and pay a dividend tax on it? If you're a sole trader, then it's all yours anyway, because you already pay tax on it, because you pay tax on all of your net profit. Or do you keep it in there because you've already paid your corporation tax on it? And do you reinvest it to build another clinic room, to bring another member of staff on? That is all aligned with your financial forecast. And I do want to say that if you feel really overwhelmed by this, if you feel angry that you can't manage your money, if you feel bad that you've not done that, it is 100% normal. It's absolutely okay. Just start somewhere. Because if you start managing your money better, then you are giving that energy out there that you are ready for more of it. You're ready to receive more of it. So money management is really key. Just start somewhere in terms of looking at all of these things that go on in my business, all these things that I spend loads of time and effort on, and how much profit did I actually make as a result of it? And start being cutthroat, start being ruthless in where you spend your time. I hope you've enjoyed listening to this podcast. Don't feel overwhelmed, just start somewhere. And I look forward to seeing you in the next one. Thanks for listening to the Treat Your Business podcast. Hit subscribe now and keep joining me for bigger insights, bolder conversations to help you build a clinic and a life you love.